Hello, hi everyone. Good evening. Okay, welcome to our stock seminar. Today I'm going to share with you this very important topic. It's called Will there be an October correction? I'm sure some of you have been playing stock market. It has been quite a volatile few days. Okay, you may be wondering, is there going to be a correction? Okay, so welcome to our Facebook Live and YouTube Live. Okay, so if you're in the room, can you please say hi to me? Okay, let me know you're here so that I know you're here. Let me see. Okay. Is my Facebook live now? I can't see your comments. Okay, hi. Okay, welcome. Hey Johnny. Okay, hello, hi. Alan Lee, Wen In. Okay, Helena Cho. Okay, Lin Liu, Jessie Tan. Okay, hello. Okay, while we are being locked down at home, okay, I hope you enjoy this seminar today. Okay, so I'm going to discuss with you very important topic. Okay, will there be an October correction? As some of you may have already known, the stock market has been volatile. This week, I think there was one day, the day before, S&P 500 actually dropped 100 points. Okay, will this trend continue amid this volatile market? And why is it so? Okay, going forward, why is it perhaps uh, that the stock market is really not certain? Okay, what's the reason behind it? Okay, is it because of tapering? Is it because of this debt ceiling issue, or is it because of this what we call the tech correction? Okay, so I'm going to share with you all these findings and research, okay, so that you get yourself prepared. Okay, going into the fourth quarter, I think it's not easy. Okay, so at least get yourself mentally prepared. Okay, what might be happening? So N Chiu, hi. Jason New, 你好. Okay, Brandon Ling, okay. Being, hello, okay. I think also got some friends in YouTube, okay. John Boon, hello. Mike Go, okay. Tek Hin Chai, hello, okay. If you are in the room, please say hi to me so that I know you are here, okay, while waiting for some of the participants, okay. 你好, okay. Ya Hua Chu, okay. Hello, hi, okay. So let's take a look. Now currently it's 9 p.m., okay. As if some of you have been playing US shares, you may know US will open somewhere around 9:30. Okay, perhaps let me take a look what has actually happened over the last few days. Okay, this is the chart of S&P 500 index futures. Okay, so what happened is that from the start of the month in September, S&P 500 reached a all-time high of 4,549 points. Okay, almost 4,550 points. Okay, so from then on, okay, in the last few weeks, S&P has dropped to as low as 4,300 points, a drop of somewhere around 250 points, which I think is quite a drop. Okay, quite a drop. It's almost like a 5% drop. Okay, a 5% drop. And now currently is hovering somewhere around 4,361. Okay, 4,361. Okay, a lot of people thought that after Federal Reserve, Jerome Powell talked good about the economy, it did recover slightly, right? It did recover slightly from 4,003 to as high as 4,450 points. A lot of investors thought everything is over. Okay, everything is over. The panic is over. And even asked me this question, Daniel, can I buy Apple? Can I buy Nvidia? Can I buy Netflix? Can I buy all these stocks? Okay, all these so-called good stocks. Okay, Microsoft. Okay, Amazon. Okay, and by the way, Amazon suffered a collapse amid the earnings. Okay, so a lot of people ask me this question, can I buy all these shares? Okay, I did say hang on. Okay, and following which the last few days it hasn't been really that good. From 4,450 points, it dropped to as low as 4,338. Okay, although yesterday it recovered slightly. Okay, but judging by this so-called bullish candle, okay, I would say it's not so bullish. Okay, you can see it's almost a what we call a hammer. Okay, so it's a sign of weakness. And following which today it did rise. S&P did rise somewhere around 100 to 200 point. But you can see even the doji is forming, okay? After the rise, everything is like disappeared, okay? So it shows that there is huge weakness to the market today. I don't know, maybe today there may be a slight decrease, okay, at the open, okay, but I feel that it shouldn't rise a lot, okay? This month, I would say it will be a very hard month, okay? Coming forward in October, it may be a very hard month, okay? So today I want to get yourself prepared, okay, for this upcoming month and what might happen, okay? So, Paul Chong said, "Hi Daniel, is it a head and shoulder formation for S&P 500 index?" Okay, yeah, I think Paul is a chartist, okay, and he did point out this pattern formation forming. Okay, I agree with Paul, okay? So going forward in October, you need to be extremely careful. I would say that if 4,300 support is broken, all hell may go loose, okay? So 4,300, I would say, is a very, very important support, okay? A number I will keep track of. Of course, we are around 58 point off 4,003, okay? So as you can see, okay, a lot of people are talking about this formation. It's called the head and shoulder, okay? Head and shoulder formation, okay? So this is the left shoulder, this is the head, and this seems like the right shoulder, okay? So this is what we call a head and shoulder and the neckline, okay? So normally, at the peak of a bull market, okay, at the peak of bull market, sometimes you will see such a formation, whereby this is the left shoulder, this seems like a right shoulder, and this is the head, okay, of the mountain, okay? So this is what we call the neckline support, which is, I would say, somewhere around 4,300 point. So what happened is, if this neckline is broken in the next few weeks, if this 4,003 is broken, there might be a bigger drop, okay? Or maybe there might even be a crash. It might happen. So looking at S&P 500 index, I would say 4,300 is a very important figure to watch out for. Make sure it doesn't break below this figure, okay? If it break below this figure, there might be a chance of further drop, okay? So if you were to ask me, I would say there will be a good probability this figure will be broken, okay, going into October, okay? I would say there is a good chance 4,003 might be broken. And later I will share with you why, okay? What's the fundamental reason, okay? Why the market is so weak today, okay? Okay, good. K Ping C asks, does this year, Q4 still have festive season rally amid similar to past years, okay? Okay, a lot of people have been talking about this, okay, so-called the year-end rally, okay? Yes, it does happen, but normally it happens when the market has a correction before the year-end rally start, okay? There are some years whereby year-end rally doesn't happen. Okay, let me show you the past history, okay? Normally, the year-end rally starts from November, okay, November, and ends somewhere around February period, okay? So that is what I label as the year-end rally, okay? And there are many years, of course, that we have a year-end rally, okay? Because year-end is a festive period, everybody is so happy, people go and buy things, right? Shop online, perhaps they may even want to go and buy some cheap stocks, okay? So it normally start from November, Thanksgiving, okay, a few weeks before Thanksgiving, okay, and last until somewhere around February after the first quarter earnings. A lot of stocks in America, they will declare first quarter earnings, the fourth quarter earnings, somewhere around January to February period, okay? That is when the optimism, the hype will reach a peak, okay, because a lot of stocks declare very good earnings that beat the consensus or the analyst estimate, right? So that's why normally after February, okay, it kind of like simmer down, okay, the hype simmer down, okay, and kind of like die off, okay. That's what we call the year-end rally, okay. But having said that, Are there years whereby the year-end rally doesn't happen? Yes. In fact, in the last 3 years, there are 2 years it doesn't happen. The market actually crashed. Okay, there is a mini crash amid the year-end rally. Okay, so what happened is in 2018, there is a January crash. Okay, there was a January crash in S&P 500 index. So in January, around end of January, from 2,800 point, it dropped to as low as 2,530 point. That is a 300 point drop. Okay, 300 point drop. Okay, so for a 2,000, at the time 2,800 point index, it dropped 300 point. Is almost a 12% to 15% drop in just a matter of a few days. In just a matter of few days, okay, there is a more than 10% drop in the index, and that means your stock got the chance of dropping more than 10%, right? Some of the stocks may even drop 30% amid the year-end rally. This is a year-end rally, okay, whereby a lot of companies declared their earnings, and it happened not so long ago in 2018, okay? Then what happened is in 2019, the same thing happened. Sorry, 2018, the same thing happened. Okay, before 2019, in 2018, okay, in December, in just one short month, the index S&P 500 from 2008, it dropped to as low as 2003, a 500 point drop while we are celebrating Christmas, right? In December, okay, there's no Christmas feeling for investors, okay? In fact, we all lost money, okay? I've been through that time and it was not easy, okay? A 500 point drop for a 2,800 index, which is almost 500, is almost a near to 15 to 20% drop, right? 15 to 20% drop. Your stock can drop easily 30 to 40, okay? In just one short month. This is not like, okay, half a year. 1 month, okay, your stock can drop somewhere around 30 to 40%, okay? So does it mean that, okay, year-end rally or festive rally always happen, or sometimes they call it Christmas rally, okay? No, it doesn't. It depends on what happened before year-end. If the stock market continue to rise before year-end, I would say there may be some chance there might be some correction, okay? But if beforehand there is a correction, okay, sometimes if you hear there is what we call the October crash, the October correction, or the third quarter correction, there are years whereby third quarter, it actually dropped a lot. Then the year-end rally will reflect in the market. Okay, so for example, okay, I've seen a few years, it happens, okay. Okay, like for example, in 2016, okay. So what happened in 2016 is that was the year whereby Donald Trump got elected. Okay, if some of you remember. Okay, so Donald Trump got elected on the Donald Trump, correct? Okay, the last president. Okay, Donald Trump got elected. Then what happened is on that day itself, the market crashed. Okay, the market crashed. So from almost 2001, it dropped to somewhere around 2,000 point. Okay, yeah, you can say it's almost a 5% drop. Not really a big correction. Okay, but that day itself, okay, ever since he got elected, the stock market rallied. Okay, into the year end. So we have a very good year end to 2016. Okay, so I would say it really depends on how the market is before year end. Okay, before your November period, okay, your festive period. If before November we reach our all-time high and the market did not correct, there may be some chance there might be some correction. But if it has already corrected, okay, and there are a lot of years whereby third quarter hasn't been good, so the market corrected before year end, and that's when the year end really rallied, okay, and a lot of stocks actually gone up a lot, okay. So for now, okay, the situation is we really don't know what might happen, okay. The stock market, considering that, okay, 1 year ago, it was still at around 3,006, and today it has reached somewhere around 4,004. Okay, in fact, the last 1 year, okay, the last 1 year, almost a 1 year, the last 1 year, it has been so good, the market has not corrected that much. Okay, not even like a 5% or to 10% correction. Okay, so it keep on rallying for almost 1 year. Okay, so will there be a chance going forward there might be some correction? Maybe, right? Okay, good. Let me get to our PowerPoint. Will there be an October correction? Okay, or maybe a year-end correction? Okay, if the support is broken, what will happen to gold price? Okay, later we'll take a look. Okay, we'll take a look. Okay, in fact, gold has been quite weak for the last few days. Okay, so I would say it has been weak because a lot of people are anticipating the tapering will happen, and follow which there might be a rate hike. Okay, so people are afraid of rate hike. Okay, in fact, rate hike is not good for gold. Okay, later we'll take a look. Okay, at all these commodities, right? Okay, let's take a look at S&P 500. Of course, as you all know, okay, in US there are three major index. Okay, three major index. The first is S&P 500 index. I would say S&P 500 is almost the strongest index among all three. So let's take a look what happened. Okay, so you can see that S&P 500 last November, when this President Joe Biden got elected, it was still lying at around 3,200 points. But today it has climbed to as high as 4,004, right? So it has increased almost 1,200 points in the last 1 year, okay, in the last 1 year or 11 months, okay? So the market has been very, very bullish. It has been very, very bullish, okay? I use a metric, okay? So today I want to introduce to you my own proprietary indicator to show how bullish the market is, okay? So let me take a look at the charts of S&P 500 index over the last 1 year. Okay, I always use an indicator called the cash ringing system. Okay, an indicator I actually founded more than 10 years ago. Basically, it indicates 2 lines every month. Okay, 2 lines every month. Okay, so let me take a look. For example, in April this month, right? So in April, you can see there are 2 lines here, okay, that is drawn inside this chart, okay. So what happened is, at the start of the month, if the index is above my 2 lines, I consider it in the bullish region, okay. So that entire month, most likely this index is on the uptrend, is in the bullish territory, okay. So if at the start of the month the index is below the 2 lines, that is what I call the bearish region. So if it's in the bearish region, you need to be careful, okay. You might not even want to buy this index or this stock, okay. But if it's touching the 2 lines, I call it in the no direction range, okay. No direction, that means it's not going anywhere, okay. So above the 2 lines, bullish, below the 2 lines, bearish, okay. But I want to show you something. Ever since November last year, when Joe Biden got elected, almost every month it has been bullish, okay. Every month it has been bullish, okay. So you can see in November, okay, let me blow up November period. Normally, I will wait for the 4th day for confirmation. Okay, 4th day of every month for confirmation. Okay, so 1, 2, 3, 4. Okay, on the 4th day of every month, at the start of every month, I will take a close look at what is the trend. Okay, what is the trend, especially S&P 500 index. Okay, so if it's above the 2 lines, I consider bullish. Okay, above the 2 lines, I consider bullish. Above the 2 lines, I consider bullish, bullish, bullish. Okay, so almost every month is above the 2 lines, right? Bullish, 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 until this very month, the month of September. Of course, we are coming to a close in September, okay. What happened is, in the middle of September, this index dropped below my CRS lines. Okay, it dropped below my CRS line. In the middle of the month, it has turned bearish. Okay, this is after almost 10 months of bull market. This month it has turned bearish. Okay, it has turned bearish. Okay, and normally, based on my experience, any index that has been bullish for at least 6 months, consecutive 6 months, if it has been bullish for 6 months, the moment it turned bearish, you need to be extremely careful. There might be a big correction or a crash. Okay, there might be some correction or even a market crash. Okay, and it has already turned bearish. So all signs are not good today. Okay, all signs are not good today. In October, it might continue its bearishness. Okay, of course, I need to determine next week what actually happened. Okay, at the start of the month. Okay, so now let me give you a very, very good example. Okay, this is the famous cryptocurrency. Okay, I cannot say its name. If not, Facebook will ban me. Okay, it's called the bit dot 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 dot, right? So what happened is last year, this index, okay, goes from, okay, the month October being bullish until April, okay? Then what happened? It has been bullish for 1, 2, 3, 4, 5, 6. Like what I said, any index that gone straight up for 6 consecutive months, the moment it dipped below the CRS lines, you need to be extremely careful. There might be a crash or a correction, or at least a big correction, okay? And that was what happened, okay? In April, it dropped below the CRS lines, and it continued to be below the CRS line in May, okay? CRS is the short form for cash ring system, okay? And in May, it actually crashed. This index actually crashed half its value. I'm sure all of you who keep track of, okay, all these financial instruments, you know, okay? Cryptocurrency, the whole entire market crashed in May. Okay, and this index from 60,000, it crashed half the price to 30,000, okay? And following which, for the next couple of months, is below our CRS line in the bearish territory, right? Until July, it starts to turn bullish again, okay? So this is a market crash, okay? The same goes with this index called soya bean. Okay, soya bean, ever since October last year, it has been bullish. September, October, November, December, January, February, March, April, May. It has been bullish and above our CRS lines, but in May, it dropped below the CRS line. Okay, in May, it dropped below the 2 lines and it crashed. Soybean price crashed. Okay, 1,500 in a matter of 2 to 3 weeks, it crashed to 1,003. And following which, for the last few months, it has been bearish until today. Until today, it has been below our 2 lines. Below our 2 lines, the market has crashed. Soybean dropped almost 20% in price. Okay, can you imagine an index drop 20%? Your stock will drop almost, okay, 30 to 40. Okay, soybean crashed in June. Okay, so anything that has been on the rise for a few months, especially 6 months or more, you got to be extremely careful. Okay, the moment it dropped below our CRS, there might be a danger. Okay, there might be some danger. Okay, and that's the reason why I called for this meeting today. Hopefully you get yourself prepared. Okay, of course, I don't know whether the crash might come. Even if it don't come, just get yourself mentally prepared. Okay, now this is S&P 500 index. Let us take a look at Dow Jones Industrial Average. Okay, so this has been I would say a very strange year. I've been playing US stock market for many years, okay? Almost at least, okay, full-time 12 years experience. Never have I seen a market that is so diversified, okay? So there are some months whereby Dow Jones turned bearish, but yet S&P 500 remain bullish. There are some months that Nasdaq turned bearish, but Dow Jones remain very bullish. So there is almost a divergence among all these three indices. Okay, so let us take a look what happened this year to Dow Jones. Okay, so ever since same thing, when Joe Biden got elected, Dow Jones was very bullish. Okay, it has been bullish for 1, 2, 3, 4, 5, 6, 7 straight consecutive months. And there was 1 month it dips below the 2 CRS lines, and that was June. That was June. The moment June dips below the CRS lines, okay, a lot of stocks that's closely related to Dow Jones, okay, like Boeing or whichever share, okay, P&G, it crashed, okay, it dropped quite a lot in the month of June, okay. So I still remember Dow Jones for almost consecutively 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, it keep on dropping drastically, okay, in June. But yet Nasdaq tech stocks survive. Okay, the only Dow Jones crash, but yet Nasdaq tech stocks survive. Okay, and following which it start its climb again, and only this month it dropped below the 2 CRS lines. Okay, so that is why if you look closely at some Dow Jones related stock, like for example Boeing, okay, it performed badly in the month of like June, okay, starting of June to July, okay, because the index actually dropped, okay, below and turned bearish, right? So yeah, even okay, so that is Dow Jones, okay. But having said that, Nasdaq, okay, in the first half of this year, it did not it did not perform that well. Okay, it did not perform that well. Okay, Dow Jones increased, S&P 500 increased. Okay, both of them are bullish, but yet Nasdaq crash. Okay, or I don't say crash, but has a big correction somewhere around March period and May period. These 2 months, it dips below our CRS line. Okay, so you can see, looking at the chart, November is bullish, December bullish, January bullish, then February it starts to drop, March the whole month is below the 2 lines, is bearish, right? Then April it recovered, May it turned bearish again, right? Then June recovered, bullish, and following which this month it turned bearish again, right? So what happened is during the first half of the year, if some of you have been keeping track of tech stocks, okay? By the way, how many of you are buying tech stocks, okay? If you have been keeping track of tech stocks, can you give me a good sign, okay? A good sign. I'm going to explain to you what might happen to tech stocks in the next few months, okay? Just give me a good, okay? A good sign, okay? And I'm going to share with you what might happen over the next few months, okay? But, okay, let us take a look at what happened in March. Okay, thank you for your good sign. Okay, thank you. A lot of tech stocks in March this year, it crashed. A famous stock is called, okay, that crashed in March is Tesla, right? The electric vehicle company. So what happened, it crashed in February and it reached as low as $550 from as high as $900. It dropped 400 points, a 40% crash. I would say more than 30% I consider a crash, right? In the stock itself. Electric vehicle companies crash in March this year because Nasdaq crashed. Okay, Nasdaq corrected big time in March. So you can see even NIO dropped half price, right? So Apple, okay, one of my favorite stock, Apple, in March, okay, from almost 144, it dropped to almost $116. Okay, so it dropped somewhere around 30 points, right? 30 points, okay, which is somewhere around 20% to 25%, okay, in February to March period. Okay, so a lot of tech stocks actually crashed in March. Then following which, okay, in May there is another big drop. Okay, somewhere around May period. Okay, of course this stock did not drop as much, but it dropped somewhere around $13. Okay, 137 it dropped to 122, right? Around $15 drop. Okay, so a lot of tech stocks actually dropped quite a lot in March as well as May period. Okay, this is one of my of course this is one of Wall Street darling. Okay, it's called Netflix. Okay, so throughout the whole month of March to May, it hasn't been good. Okay, the stock dropped from almost 570 to as low as $480, a 100-point drop, a 20% drop. Okay, during that period. Okay, during that period. And guess what? A lot of Cathie Wood stocks. Okay, if some of you know Cathie Wood, okay, she's well known for investing in all these so-called high-tech growth stocks, right? Like NIO, Tesla, okay, or Coinbase, okay, such high-tech, so-called high-tech growth stocks, okay. I would say her index really crashed, okay. Okay, in the month of March, okay. But throughout the whole 1 year, there isn't any months whereby all three index are bearish together. Sometimes it's Nasdaq turn bearish first, or Dow Jones turn bearish, while S&P remain bullish. So there seems to be a bit of so-called diverse nature, right? Some are bullish, some are bearish, okay? This month is the only month whereby all three indices are bearish together. So it tells me something. The whole market today is weak now. The entire market today is weak. Nasdaq has turned bearish, Dow Jones has turned bearish, S&P has also turned bearish, okay? So this is Dow Jones and this is S&P. All three indices now are aligned in the month of September, okay? So this is a first in the last 1 year. So going forward, what may happen to cause all these three index to remain bearish? Okay, so let us take a look at some of the problems, up and coming problems that we might face in the market. Number one, the last few days, Wall Street has been talking about this. It's called the bond yield problem, right? And if you remember, in March this year, why did tech stocks crash? It's because of a sharp rise in bond yield. The bond yield suddenly jumped. It caused people to panic and sell away all the tech stocks. Okay, so this was the article I found in March. Okay, March the 8th. It was mentioned tech stocks tumble as bond yields jump despite stimulus plans. Okay, forget about the oil that is behind. Okay, so some of you may ask, Daniel, why do tech stocks got to do with bond yield? Okay, so first and foremost, what is bond yield? Basically, if you buy US Treasury bond, okay, US government will pay you a yield, okay, or what we call like a dividend, okay, every year, okay. So buying bonds from the government means that you are actually lending the government money, okay. If you buy Singapore bonds, you are lending Singapore government money, okay. So in exchange for you lending the money to the government will promise you a certain yield rate, right? That is what we call the bond yield rate, okay. So what happened is this was published just a few days ago, 27th of September, okay? It says that Nasdaq suffered the worst day since March. It dropped one day 2.8% as the yield rate spike hit tech stocks. Okay, of course that day Dow Jones dropped 570 points, but it did not drop as much as Nasdaq. This is almost the same phenomenon that happened in March. Dow Jones is not as so-called weak as Nasdaq, okay? Mainly because it's not tech-based, okay? It's not tech-based, okay? Now, this was an article I download, okay, from this CNBC, okay? So let us read out and later I comment. Why is it this bond yield, you got to be extremely careful. Try to avoid tech stocks from now onwards, okay? Because the same thing that happened in March may happen in the next few months, okay? So it was mentioned here that US tech stocks fall sharply on Tuesday, with tech names dragging down the broader markets as Treasury yields traded near 3-month highs. Okay, the 10-year Treasury yield continued its speedy climb on Tuesday, rising as high as 1.567% as investors bet the Fed would carry through on its promise to curb its emergency bond buying stimulus as inflation jumps. The 10-year yield, which traded as low as 1.13% as recently as August, has reversed dramatically to the highest levels since June, after the Fed signaled last week it would taper its $120 billion in monthly bond purchases soon. Okay, so we all know what happened, okay, over last week when this Federal Chairman Jerome Powell talked about, okay, the economy. He did mention that most likely he will announce the tapering in the next meeting. The next Federal Reserve meeting will be on the 3rd of November, okay, 2 to 3 weeks before Thanksgiving Day, okay. So he would like to give us some present, okay. So what happened is he's going to start the tapering in somewhere around December period. The announcement is 1 month before in the Federal Reserve meeting, somewhere around November, okay. He did say he will soon taper, okay, and this is what caused the bond yield rate to rise suddenly. Okay, the fear of this tapering is flaming the bond yield rate, okay. So this person talks a bit about what Federal Reserve stand is, okay. The market has been steadily coming around to a reality that yields were awfully low relative to the fundamentals. Now the Fed is shifting and everybody is shifting their position all at once, as we tend to do, okay. Said Katie Jones, Chief Fixed Income Strategist at the Swap Center for Financial Research. Okay, so let me share with you something. Okay, very critical. You note these words, okay? The Fed is now shifting its stand. And last week, Jerome Powell, okay, the Fed chairman already said, okay, they are slowing down or slowing down in the printing of money, okay, in buying back the bonds, okay. So they are no longer thinking that the economy is in need of printing money. They are trying to slow down, okay. Of course, the slowdown effect we call it taper. That means they slowly, okay, buy less and less bonds every month. Okay, so now currently what happened is every month they are printing $100 billion to buy bond from the market, okay. We no longer will have $1 trillion of stimulus package as what happened a few months before, right? So at the time, the US president announced that we are going to print around $1 trillion to build infrastructure projects, right? So that was already announced. And in fact, now Congress is fighting whether this $1 trillion will still be printed, okay? So anyway, there won't be a big stimulus package anymore. But every month, consistently, ever since COVID period, US has been buying back bonds. This is the monthly printing of money. So there are two kinds of printing of money that Federal Reserve has done over the last 1.5 years, right? Ever since COVID. The first is big stimulus package, like $1 trillion, $2 trillion, $1.5 trillion. That's what we call big stimulus package. But they also did another thing. They also buy back the bonds every month at somewhere around $120 billion. That is the monthly bond purchase. Okay, the monthly bond purchase. Okay. So now, we all know that is not possible that Congress will ever print $1 trillion again. So forget about the big stimulus, right? Now we are concentrating on the monthly purchase of the bonds, okay? The monthly, the so-called the small stimulus, okay? But even for the small stimulus, now Federal Reserve think there is no need anymore. In the next 7 months, they are going to stop everything. But they can't say, I stop printing 120 billion altogether, right? They call it tapering, okay? So the rate of printing of money every month will slow by somewhere around $15 billion, okay, if I'm not wrong, okay? So at the end of July, they are going to stop everything. So that means December will be the first this tapering, okay? So they will only print 120 minus 15 is 105 billion. Next month, they will print 90 billion. And the next month, 75. The next month, it will be 50. So they keep on slashing 15 billion every month until next July. Next year, July, everything finished. When everything finished, the economy is on its own. The stock is on its own, okay? You better don't have any COVID, okay? So, this is the consensus now. Federal Reserve is changing its position. And this guy says that since Federal Reserve is changing its position, everybody is changing its position. So if you are a bond investor, you'll be changing your position. If you are a stock investor, you'll be changing your position. If you are a commodities investor, you also need to change your position. Basically, shifting your position means you shift from things that you think is dangerous to shift to things that you think is not dangerous. That's called shifting of position. Okay, you better hedge your risk. Basically, it means you better do some hedging. The market is in for a change. Okay, after this 1 year of printing our money, we are going to change. Okay, so you better do something to your portfolio, and that I mean you. Okay, you are looking at me now, yes. Okay, but from now onwards, okay, you better shift your position just like Federal Reserve. Okay. Now, then you may ask, what does it has got to do with tax, right? Okay, how a so-called a yield rate rise will cause tax stocks to go down? Okay, this is explained in this paragraph. Okay, tax stocks fell as tax shares fell as a rapid rise in rates make their future cash flows less valuable, and in turn makes the popular stocks appear overvalued. Higher rates also hinder tax stocks' abilities to fund their growth and buy back their short stock. And that includes, okay, I will say this is very important, so-called the FANG stocks. The Facebook, the Microsoft, the Alphabet, the Apple, the Amazon, all these are called the FANG stocks, okay? They have dropped drastically over the last few days, okay? All these three stocks dropped more than 3%, Amazon dropped more than 2%, large chip stocks struggled with Nvidia, one of my favorite stock, Nvidia, okay, a 5G counter, slide somewhere around 4.5% in just one session, 1 day, okay, just 1 day of drop. Can you imagine a 1 month crash? Okay, they'll be left with nothing already. Okay, so what I want to share with you is those tech stocks that you think is bullish, the Facebook, the Microsoft, the Alphabet, the Amazon, the Nvidia, okay, whatsoever, okay? These tech stocks has been doing very well for the last 1 year, okay? It almost never dropped, it almost never correct. but in the next few months, it might. Okay, it might. Now is not the time to buy yet. Okay, wait for the crash to come. Okay, why? Because they are popular, and popular stock is now overvalued. So if interest rates starts, okay, so basically what happened is, okay, once this tapering ends, so it will end next July, right? So once this tapering ends, Federal Reserve is going to start to increase interest rate to fight against inflation. So people are afraid of interest rate rise. People are not really afraid of tapering. They are afraid of interest rate rise. The moment interest rate rise, it will be a competition to the stock market. People may not want to buy such a high risk instrument anymore. They will rather buy things that promise them high interest. So when interest rate rise, everything rise. Okay, everything rise. Okay, any instrument that promise you a certain dividend, they will rise. Okay, they need to rise. Okay, to fight against the bonds, right? To fight against interest rate. Okay, so now let me tell you the bond yield problem. Okay, last March, tech stocks crashed. Cathy Wood, a lot of stocks crashed almost 50%, just like that. Okay, NIO dropped 50%, Tesla dropped 40%. Okay, it's because of the same bond yield problem. And now, let me tell you, in March, I call it the fake bond yield rise. In March, that is the fake bond yield rise. A lot of people in February thought that Federal Reserve is going to slow down on the tapering. It's going to slow down on the printing of money. That's why bond yield suddenly shoot up and bond price crash. That's what I call the fake bond yield rise. Can you imagine the fake bond yield rise can cause all these high-tech growth stocks, to crash almost 50%. What happens if the real bond yield rise comes, right? So this was last March. Can you see? Bond yield rate rises sharply. Okay, this March in 2021. Okay, this bond yield rise caused the tech stocks to drop a lot. Okay, only when the bond yield start to drop, that's when the tech stocks recover. Okay, this is what happened this year in March. So where is the bond yield today? Here, 1.55%. This is the latest chart I actually download from a website. Okay, today the bond yield, the 10-year bond yield is now at 1.55. But guess what? From the technical perspective, okay, looking at the chart, it has rebounded off the 200-day simple moving average price. Okay, this line here, but of course you are looking at the weekly chart. Okay, weekly chart of 10-year treasury notes. Okay, 10-year treasury yield. This is the 50 SMA line. This is the 50 SMA line. 50 SMA line on a daily chart is equivalent to 200-day SMA line on the daily chart. Okay, so now what happened is you can see that this is a very strong support for the 10-year treasury note. Over the last few months, it did not break below the support, and suddenly it lift off. It jumped up. Okay, and I will say there is a strong chance it may even go up further, because this is the real tapering. This is not the fake tapering that people thought it might happen in March. This is the real one, confirmed already. Okay, last week already announced to you. Okay, so let us take a look. Okay, this is what we call the bond yield problem, the bond yield tantrum. Okay, fears of a repeat of 2013 taper tantrum built as treasury yields spike. Okay, so what happened is, the moment there is a The same thing happened in 2013. I want to point out to you, okay? 2013, at the time when Federal Reserve Chairman, his name is called Ben Bernanke, okay? Of course, today we already changed the chairman, okay? Ben Bernanke at the time is the Federal Reserve Chairman. The moment he says the words tapering, immediately the bond yield shoot up for months, okay? Until one day it subsided. It went up to as high as 3%. Bond yield rate went up to as high as 3%. Today we are almost half of it, right? 1 point something, okay? It went up from 1.6 or 7%. It shot up to 3% that month when Ben Bernanke announced that we are going to taper. I can't imagine how tech stocks will drop after this, okay? So, it went up double its value, you know. Double its value, okay? Let's take a look again, okay? So, this year, March, it did go up, okay? It rises to almost in February, it was 1.2 to almost 1.5, somewhere around 1.8. That was the highest peak, okay? Then it starts to drop back to 1.2%, okay? So tech stock after that has been doing quite well, okay? But now it's rising from 1.3%, okay? So people feel that after that, the bond yield isn't so-called, the tapering may not be so fast, okay? But it's only after June or July that this tapering problem starts, okay? Because a lot of analysts start to talk about tapering, and it really happened, okay? It really happened so fast, okay? So let me show you two diagrams, okay? Two diagrams that I actually downloaded in June, okay? The first diagram is a diagram from Goldman Sachs forecast. Goldman Sachs is a well-known investment bank in America. The second diagram, is in Chinese words, but it's from Bank of America. Okay, 美国银行, Bank of America. Okay, what I want to show you, this is a diagram that I start to found in July. Okay, in the websites. Okay, in websites. Okay, so in zeroh.com. Okay, the website is called zeroh.com. It was mentioned, right, that the first hint of tapering will start in August and September. So in July, the investment banks or US bank has already known that Federal Reserve might start to taper, and they will give a first hint in August or September. And they are right. And bear in mind, this was done a few months ago, okay? The formal announcement, they said, will be in December. The formal announcement of the tapering. And the tapering will start next year, January, at the pace of $15 billion per meeting. That means they decrease by $15 billion, okay? And after which, they will end their tapering on the fourth quarter next year, and they will take a pause first. They will take a pause, follow which rate hikes will start 2023 quarter one. That was the consensus by Goldman Sachs. Okay, it was a forecast. Okay, the same thing happened to Bank of America. Okay, they said that after the Jackson Hole meeting, right? In September, they will announce 宣布, okay, 宣布退市, okay, that means start the tapering, okay, announced in September period. Okay, then they will give a hint in the meeting in September, which is last week, right? So, Jerome Powell actually give us a very strong hint. Following which, at the meeting in November, they are going to tell you how much to taper, and they will start tapering in December. And let me tell you, both these banks, they are independent banks, but they give the same forecast. They have the same timeline, almost exactly the same timeline, right? They say they will give a hint in September, which will really happen. And they will say they will give a formal announcement in November, which last week Jerome Powell says, okay, and they will start tapering either in December or January, which is what Jerome Powell last week says. How did they know? That's the thing. They know because Federal Reserve already tell them. You better do your hedging. Ask your VIP clients to shift your funds here and there. You better do some hedging. If not, the market fall, not my problem. You better, okay? You make sure your bank can survive this tapering. Okay, so let me share with you. Here's how the tapering look like. Okay? So this is another article that I download, okay? It was mentioned by Jerome Powell, says that the official tapering decision could happen at the November meeting. Last week he said that. And the process would commence shortly after. Thereafter, he added that he sees tapering being finished sometime around the middle of next year, which is exactly around June or July period. Okay? That timeline then offers a view into how the actual reductions will go down. If the taper indeed begins in December, reducing the purchases by $15 billion a month will get the process down to zero in 8 months or July. Jones said she would expect the Fed to cut treasuries by $10 billion a month and mortgage-backed securities by $5 billion a month. There have been some calls from within the Fed to be more aggressive with mortgages, considering the inflated state of housing prices, but that seems unlikely. Okay, so this is a confirmation. Okay, last week he said these words. He said these words, and it was reported already in a lot of newspaper. Okay, 15 billion a month starting from December, but the official announcement will be November the 3rd in the next meeting. Now, this is what we call the tapering problem, the tantrum. Okay, the tantrum. What will happen to the stock market? This is what happened. In 2013, the same thing was mentioned in the tapering. Okay, the moment it was mentioned by Ben Bernanke, and at the time it was cut $5 billion per meeting. Okay, the stock market dropped 15% following which. And in 2014, was the real cut, was the real taper. This was the announcement. The moment he announced, the stock market dropped. That's why we call it the taper tantrum. Okay. Then after which it really start to cut, and S&P went into a period of volatility. Okay, so it's very volatile. Okay, so there were some months whereby it actually dropped almost like 20%. Okay, and following which in 2015 they end all the purchases. Okay, they end all the purchases, and guess what? Okay, after which it crashed again. Okay, after they end everything, it crashed again. And they started QE3. Okay, they started another QE. Okay, so that is the second problem we are facing today. The first problem is the bond yield rate is going to rise, and it's not going to stop. Why? Okay, because the moment tapering is finished, people will guess when the next rate hike would be. The moment people speculate the rate hike increase, bond yield will rise. Okay. And if some of you know, if US government cut the buying of bond purchase, that means the bond demand will decrease, right? When the government cut bond purchase means the demand of bond decrease, bond price will drop. The moment bond price drop, bond yield is surely to rise. Okay? The moment the bond price drop, bond yield will rise. Okay? So that's what people are fearing. Now, the third problem is the debt ceiling problem. That's going to happen in the next couple of weeks or the next few weeks. Okay? Now, it was mentioned here that also weighing on sentiment was a budget showdown in Washington. The Senate Republican blocked a House passed bill on Monday that would have funded the government into December and suspended the debt ceiling until December 2022. Congress must approve government funding by this Friday, to avoid a shutdown. And Treasury Secretary Janet Yellen who support, by the way, Democrats, okay, she's a Democrat, okay, warned Congress in a letter on Tuesday that lawmakers need to raise the debt limit by October 18 to avoid a government default, okay. President Biden's massive infrastructure plan now faces an uncertain future, okay. So now, the problem comes, okay, amid all these problems, there is also going to be one in-house problem, which is now Republicans is blocking, okay? They want to block and hopefully get, okay, Donald Trump back. Okay, so this is a problem that I think will be still around until December, unless they sign the bill, okay? The same debt ceiling problem in 2011 that is such a big episode that caused S&P 500 to crash almost 20% might happen in the next few weeks. This Friday we shall see, okay, how is it, okay? Whether there's a government shutdown. Okay, that's the third problem we are facing. The fourth problem is the inflation problem, okay? Now, this is an article I actually downloaded from Nikkei Asia, okay? They actually interviewed Federal Reserve, one of the member. Okay, bear in mind, Federal Reserve is a committee of 18 people, 18 bankers. They represent different banks in America. Okay, there's Bank of Philadelphia, Bank of Boston, Bank of don't know what, Bank of New York. Okay, so there are 18 bankers. They group together to form this Federal Reserve. Of course, today the chairman, his name is called Jerome Powell, right? Now, this is Bank of Philadelphia. The banker was being interviewed recently this week by Nikkei Asia. Okay, I download this. Okay, I have no time to go and tell you about where's the website. Okay, you can do a search. Okay, but this was the real words. Okay, by this Federal Reserve member. Okay, and bear in mind they decide the interest rate. Okay, they are the people who decide the interest rate, whether need to rise or not. Okay, but now let me share with you what is his opinion. Okay, so he said that. Okay, he said that I have gathered from supply chain disruption that are causing much of the inflation problem may be longer lived than we had initially expected. So he's saying that this supply chain problem, this logistic problem is not going away. It's going to cause this inflation to become worse and worse, much longer than I expect, or we members expect, okay? What we are hearing is that because of the chip problem, the semiconductor chip, okay, and other issues, that people are now starting to plan for longer supply chain disruptions than they had initially planned for even 6 months ago. That means people are buying further and further down the road. So if Tesla today want to manufacture a car, they need to order this chip 2 years ahead or 1 year ahead. If not, you don't have any more chip, okay? And this is a big problem now, okay? And most likely it will cause the inflation of chip or the inflation of a lot of what we call raw materials, okay? He said he just have a meeting with a group of business leaders and they are clearly seeing these wage pressures that they are feeling are not going away in the short run. They are also going to increase wages, which is a big problem now, okay, in America. He said, my forecast is still to have an inflation around 4% this year, ending this year, and then start to fall back next year to 2% over the years 2022 to 2023. However, I see an elevated risk that inflation could run higher. And let me tell you something. The official figure that Federal Reserve wants for inflation is 2% per year. If US economy can grow at a 2% rate per year, it's considered very healthy. That is the official figure that was set for the last 10 years. Not now, but the last 10 years. But inflation figure for the last 10 years has always been below 2%. That is why they can keep on printing money after money after money, all the QE1 and QE2 and QE3 for almost 5 years, 6 years straight, okay? Until Donald Trump came in. And they keep on printing money. But this time around, they can't anymore. They have to stop. Why? Inflation has reached 4%. Double what they think now. Okay? So that's why they kanchong already. Can you see now? They are kanchong already. In June, they thought that the tapering might happen next year and the interest rate might rise in 2023. But now they carry forward. This year, November start already. Okay? Next year, they are going to rise interest rate soon. They kanchong already. Because the business leader are pestering them. Can you see a group of me? Okay, the leader are fighting. Okay, they are telling, hey, fat chairman, you need to do something, right? And let me tell you, I would like to start the taper process soon. He said, so that we can finish the taper process fast. So if we need to increase the policy rate, we have room to do that. And I think we need to buy ourselves that option. He need to buy time, okay? Okay, what he's saying is, okay, the moment this tapering ends, they are going to start increase interest rate. Because there might be a need to start increasing interest rate because of hyperinflation. A hyperinflation problem they thought can be solved. Even today, they think that next year, the inflation figure will fall back to 2%. Let me tell you, no rise above 4 is considered good already. They still think next year will fall back to 2. With all this chip making problem and people buying more and more raw material further and further years down. And let me tell you, today you go and ask, shipping company, all the ships are booked. The ship freight rate has been rising crazily over the years. The chip has been rising crazy over the years. Even labor are in shortage. Okay, not only in US but all over the world. And they are still forecasting inflation is going to drop to 2% next year. With crude oil now at $70, next year I forecast it will hit $100. And they are still forecasting that we are going to go back to 2%. To me, it's impossible. They are just kidding themselves. Okay, but anyway, this is empty talk. Anytime they can raise their forecast anyway, right? And let me tell you why. Look at this inflation problem. It's not going away. It's worsening by the months, okay? So in January this year, inflation in US is 1.4%. Today is hit 5.3%. Their optimum is 4% inflation rate. That means on average, okay? They think that this year end is going to hit 4%, and they are right. But what about next year? It's not going away. It's not going away. And let me tell you, once hyperinflation comes, once inflation gets worsened, Federal Reserve they need to immediately increase interest rate and increase interest rate very, very, very fast. Okay? And that's going to burst this bubble, by the way. Because the stock cannot buy back their own shares anymore. Okay? There's only one thing that can stop the stock price from going down by buying back their own shares. Okay, number 5, rate hike pressure problem. So they already said, why do they want to taper so fast? It's because they want to increase the policy rate as fast as possible. They need to rise the interest rate. But then again, why don't they rise interest rate this year? Because they don't want the stock market to crash. Can you imagine Federal Reserve tell you that I'm going to taper and stop printing money, and at the same time I'm going to increase interest rate? When both things got together, it's double whammy, the stock market will crash. They cannot afford a market crash. They want Joe Biden to get elected again. They want to win the election again. So they need to do it one thing after the other. They taper first, see how the market, whether it crash or not. If crash, I will not definitely tell you about interest rate rise. If it doesn't, then I may announce next year. So they take one step at one time. They cannot give you a double bomb now. You will shake the world now. Okay, the market will crash. Okay, everything will crash, by the way, because everything, including cryptocurrency, rise is because of Fed. Okay, So let me tell you, this rate hike is not going away. This rate hike is not going away. You better keep track of inflation figures over the next few months. If it continuously breaks 6%, okay, it's going to cause a lot of pressure on Federal Reserve to even before the taper finish, they need to increase fast. Now they hold on, not increasing the interest rate because they can't do it. They can't do it. They're afraid the market crash. Okay. This was an article by Baron. Okay, let me show you. Okay, what I want to show you. Okay. Federal Reserve on Wednesday signaled the interest rate could begin to move higher faster than previously expected, right? As they open door to trimming monthly bond purchases this year. In its projection, he revealed half of the committee member of the now 18 participants expect interest rate at least rise one time in 2022. Out of 18, got 9 FOMC member already think in 2022 is going to rise interest rate, not 2023. Initially, they thought it's 2023. Now, bo pian already. Okay? Sorry. Initially, it's 2020, end of 2023. Okay? The Fed has telegraphed it wouldn't rise interest rate before 2024. Okay? So that means they thought that it could be 2023. Okay? But now they cannot because of inflation problem. A lot of them, the business leader, are talking to them. Okay, Wall Street thought one official might have shifted its forecast. Okay, sorry. So that means only one official shifted its forecast to have an earlier lift off. Lift off means the first rise of interest rate. After keeping interest rate so low, the first rise of interest rate, they call it a lift off. Okay, so it's a technical term by Federal Reserve. Okay, but many economists and strategists didn't expect 2 members to do so. That means out of the 18, now you have 2 already. Okay, that's it. Interest rate is about to rise soon. Okay, the fact that the 2 did not bring forward lift-off projection is significant because now half of FOMC expect rates to rise in 2022. The signal is a hawkish surprise that came as the Fed suggested it may be in the coming months to start resisting emergency. Okay, so it means basically they are now under pressure because of inflation to rise rate fast. There are more and more members that are shifting over to the other camp to rise rate in 2022. Okay, now, this is the thing I want you to take note. If they rise rates in August, after the tapering finish, okay, like what just now that Fed member thinks, okay, at least they can, after the tapering finish one thing, then they do another, right? Okay, let me tell you, they need to tell you rate hike will rise soon, 6 months before. They cannot tell you in August, hey, I'm going to rise interest rate already, better get prepared. All hell will go loose. Everything will crash, okay? They need to tell you slowly in August, 6 months before. August is February. The Fed chairman will need to tell you that we might rise interest rate 6 months later. They need to forewarn you. They need to prepare. They need to do hedging. They need all the VIP clients to do all their stuff first. Okay? If not, the market will crash badly. And let me tell you, the big problem always comes not when they first increase interest rate in August. The big problem always comes the moment they announce a rate hike. Because the expectation will already cause the correction to come. All your stocks will drop a lot. Okay? The moment you hear, so fast, not 2023, it's 2022, and 6 months later, jialat already. Okay? It will happen 6 months before the expectation will really price in. And that's the reason why every time Federal Reserve, the moment from zero rise interest rate, the market is okay. The market don't fall because they already prepare you for the rise of interest rate. They tell you we are going to rise soon, okay? But get yourself prepared. Don't worry, okay? So it is what happened before February I'm worried about. It's not what happened on the day of the rise. And following which, when interest rate rise, I'm not afraid of it. I'm afraid of the first rise and the first announcement before the rise. That's what I'm afraid of. So we are still almost 4 months into the game, right? Of course, I'm trying to project, okay, give you some projection based on my opinion, okay? My opinion is if inflation continue to worsen and hit 6% or more, okay, we are going to lead to by the way, do you know what is hyperinflation? You need to know hyperinflation. The moment you hear this word, that is when you will scare the hell out of the market, okay? Hyperinflation means your year-on-year inflation, the cost of your things, okay, your raw material or the cost of buying your goods, okay, rises double its figure. That's called hyperinflation in a span of 1 month. That's called hyperinflation, okay? So the moment your things double up the price in a short span of 1 month is called hyperinflation, okay? And bear in mind that in January, the inflation figure is still 1%. And today we are hitting 5 point something percent, okay? Okay, thank you so much, okay? The next thing, okay, if the market really has a big correction and it crash, I want you to do this. Don't be afraid. You continue to buy shares, okay? Although today I sound a bit pessimistic, okay? But I tell you, the market is going to recover and it will recover very strongly, even when interest rate rise. It's the first hint on the rate hike that will cause the market to fear. Following which, if you accept we are in a rising rate environment, the stock market will continue to power up, okay? Especially after this COVID, okay? So, I have done my homework for next year. What are the top 4 stocks that will benefit from 5G boom in 2022? Okay, I've done my research, okay? So, just that today I want to warn you, don't buy these stocks today because tech may be in trouble because of bond yield increase, okay? And all this fat problem that is going to crop out soon, okay? So don't buy now, but next year get yourself prepared. If you see these 4 companies, why I tell you to buy 5G? Because 5G next year is going to boom, okay? A lot of government are putting a lot of budget on 5G. Look at Singapore. Even our Minister of Communications is doing an advertisement with Singtel, telling you that Singtel is the #1 5G company in Singapore, right? Can you imagine a minister doing an advert, okay, on TV, talking about 5G, okay, talking about Singtel, okay? So it tells you how serious every government is in putting money into 5G, okay? So next year will be the year of 5G. Buy stocks that already corrected a lot. Buy all the tech stocks that already corrected a lot, okay? So if you want to know these top 4 stocks that will benefit from 5G boom, okay, can you do me a favor? I'm going to give you all this research free. I've done many months on 5G, okay? I know, okay, from the so-called upstream to the downstream, what are the stocks that's closely related to 5G that's going to benefit from this boom, okay? So if you want, just do me a favor, okay? You just need to do these 4 steps. Number 1, please like our page, Daniel Loh Investment Group, okay? So you go to Facebook, click like, okay? Number 2, share this video today to your loved ones or those that are interested in investment, okay? The next few months, I feel it will be a very volatile market, okay? Especially when you hear beforehand there's a rate hike increase, okay? Now you are hearing tapering, okay? People are not reacting to tapering, you know? Tapering is a big thing, okay? But the moment you hear the first rate hike, that will be like a death knell, okay? So please share this post to your loved ones, okay? Like and share this video as a public post. what I mean is like and share. Like and share, that means you put it in your don't know what your homepage. Okay, tag as many friends as possible. Okay, tag as many friends as possible and comment shared in this Facebook page. Okay, comment shared in this. Those who are in YouTube, you also need to do this because in YouTube I cannot track and we cannot send you this research report. So if you want, you need to go to Facebook. So Daniel Loh Investment Group, or you search Daniel Loh page. Okay, I think you can also find us, or you search you need to add a Daniel Loh Investment Group. Okay, you need to add a so that you can find us. Okay, or you search Daniel Loh page. Okay, so we got around 25,000 followers. So if you like our page, share this video today. Help us to share with your loved ones. Okay, as a public post, tag as many friends and comment shared in this post today. We are going to give you this report in 5 days. Okay, so get yourself prepared. I think next year is a marvelous year. If this year some of you do miss some of the big runs in tech stocks, next year if tech stocks turn cheap, don't miss it again. If you miss after the March crash, okay, please don't miss it again. Okay, every year there is going to be some correction. Okay, so do these 4 things. Thank you. Okay, next, what do you do as an investor now, going forward in the next few months? Okay, like what I said, the market may turn volatile in the next few months with all these problems around. There's number one, the tapering problem. That's definitely going to happen. Okay, and I don't know how well received will the market be when they announce $15 billion per month. Okay, and the moment it slow down, less and less money will go into all these high risk assets. Okay, even cryptocurrency is facing some problem. Okay, so you can see what will happen to stock market. Okay, number 2. Okay, bond yield problem. Bond yield problem is going to hit tech stocks very, very hard. Okay, so it's almost like the same March problem coming back again. Okay, and bond yield has already reached the 200-day SMA support and bounce back very strongly, or the 50-week SMA support and bounce back very strongly. Okay, so I don't know whether bond yield is going to hit more than 2%. If it hits more than 2%, it will be definitely more than the March figure of 1.8, right? The moment bond yield hit 3%, let me tell you, the market is going to scream. Again, the market is going to scream. Okay. Number 3, the debt ceiling that's going to come out. Okay, this Friday, I think this Friday they are going to decide. Then they need by 17th of October, which is next month. Okay, they are going to increase the debt. If not, they are going to default. Okay, they are going to have a shutdown. Okay. Amid all this problem, they have their in-house problem. Okay, now the Republican don't want to relent. Okay, number 4, the inflation problem, which is not going to go away. Even the Federal Reserve is admitting that this is a big problem that's going into next year. Whether is it your chip problem, whether is it logistic problem, the shipping problem, the freight rate problem, everything. Okay, the stuff problem. Okay, the wage inflation problem. Okay, is going to hit. The housing problem, the housing prices is rising drastically in US. Unstoppable, okay? So all this problem is going to only hasten the speed of rate hike. And of course, lastly is the rate hike itself, okay? The rate hike itself is a big bomb, okay? I don't know when they will announce it, but the moment they announce, the market is going to react, okay? Because the moment rate hike increase, it means less borrowing from the banks, okay? Less borrowing, less stimulus, okay? That means they are not going to buy back their shares, okay, to prop up the share price. So all these is going to be a big problem, okay. So the next, I would say 6 months is not an easy thing to solve, okay, because Federal Reserve has already, I would say, pushed back all this timeline of tapering or increase in interest rate until a point they cannot push back anymore. They have to do it, okay. They have to head on. They have to see how the market react, okay. Number 2, so what can you do? Prepare yourself for a market correction or crash. Prepare yourself that one day will come. That one day will come. After 1.5 years of Federal Reserve stimulus, that one day will come when you don't have any more stimulus. That one day will come when the rate hike increase. Okay? So you get yourself prepared. But having said that, I'm still an optimist amid the pessimism, okay? I'm still an optimist, okay? The market will always come back to all-time high again. So the moment there's a correction, make sure you're prepared to know where is the bottom. Where is the bottom of this tag? Where's the bottom of the whole market, okay? And make sure you're ready. Cash is king, okay, now. But make sure you're ready and put in money to buy all these good tech stocks, okay? Because if after this tech correction, I don't see Apple at such a low price anymore. So Apple is one of my favorite stock. Okay, it must be in your arsenal. It must be in your watch list. Okay, so especially when 2024 come, you're going to see the first smart car on earth. Okay, the first smart car. Okay, so get yourself for this correction, and buy all these stocks at the cheap. Okay. Yeah, number three, get ready to buy the cheap and good tech stocks if it corrects. Okay, when I say tech stock, I don't mean only the 5G stocks. Okay, the related industry to 5G, Okay, or maybe for example the EV industry. Okay, or the drone industry. Okay, so there are some, or the smart traffic industry. Okay, or the AI industry, artificial intelligence. Recently, go and look at Josephine Teo, our Minister of Communications. She did I think a seminar. She said very well. The moment Singapore launched all the 5G infrastructure and they are going to implement the standalone 5G, which is very expensive. Okay, not on top. Okay, not on top of the 4G, but the standalone 5G, which I would say next year they are going to implement it. Okay, it's going to bring artificial intelligence. Okay, it's going to bring the rise of artificial. Even our Josephine Teo has said it. Okay, so and she said a lot of good things. By the way, telemedicine. Okay, industry will also boom. Okay, so you need to look at what happened if there's a 5G infrastructure. What are the industries that will benefit? Okay. Number four, inflation is going to cause commodities to rise sharply. Okay. Yes, commodities has dropped quite a bit. Our soya bean, our agriculture, our crude oil has dropped to almost 62. Okay, 1 to 2 months ago. But let me tell you, commodities is not stopping. Okay, I would say next year commodities will boom. Okay, because of hyperinflation. Okay, you may even see crude oil at $100. That's my prediction in the next 1 to 2 years. Okay, so it's not going to go away. Okay, so if some of you are investing in crude oil, long term, continue to do so. I'm afraid this $78 barrel might break. The moment it breaks $78, it might shoot towards $90, and we are not so far away from 100 again. Okay, that's the inflation. Okay, but you need to know what are the commodities product to bet on, and how do you buy its ETF, or how do you buy its futures, or how you buy index. Okay, now number five. Going forward, I would strongly suggest you to be like a hedge fund manager. Try to shift your portfolio, your position. Know how to hedge using some option strategy. Okay, so in fact, I'm a options a veteran. I've been playing options for many years. Okay, I know options is a great tool amid every correction. Okay, so there are ways whereby you can make a lot of money from options when the market crash. Okay, good. Lastly, okay, sorry, today I can't communicate much with you. Okay, today I just have enough time to share whatever I want to share to help you to prepare for the next few months. Okay, so what I'm going to do is, time is short. Okay, I'm running out of time now, because I need to go back home. Okay, so what I need to do is, if you really want to get yourself prepared for the next half year, get yourself prepared for this market crash, for this rate hike, okay, announcement, for this tapering, okay, or whatsoever, or bond yield rise. Okay, I got a seminar for you. Okay, I got a physical seminar. This will be my last seminar for this year. I don't have any more seminar. Okay, so this will be a very small class. Okay, I know COVID is still around, but having said that, today, if I don't have this seminar, I may not have the chance anymore. Okay, I don't want to wait the day when Singapore hit 10,000 cases. Okay, we can't hold any more seminars. Okay, so this is my only physical seminar around, and it will be this one last one. Okay, so if you really want to get yourself prepared, you want to know about the whole entire market, come for this physical seminar. I'm going to share with you how to identify a market crash if it does happen. Number two, two ways of knowing the bottom of a correction. A lot of people don't know how to spot the bottom of a correction amid a crash. Okay, so I'm going to share with you a few methods and some are technical methods. Okay, number 3, knowing what tech stocks to invest in a correction, and that I mean not only the 5G tech. Okay, the related industries. Okay. Number 4, how do you use options to protect your portfolio? Okay, the reason why we need a physical class because I want to show you my account. I want to show you how to place an order. I want to show you everything. Okay. Number 5, how do you execute monthly trades to make monthly income? Okay, so these are the 5 things I'm going to cover. Okay, and this is one last class. Okay, before the end of the year. Okay, so if you want to participate, okay, we do have very limited seats because okay, this is a very small group only. Okay, so you'll be English class and Chinese class. If you want, you just register. Okay, good. I think that's all for today. Okay, that's all for today. Okay, if you want to register yourself, just click on the link. Okay, then of course in future, pay attention to our Daniel Loh page. Okay, if there is any up and coming seminars, we'll notify you. If there's a Facebook live, we'll notify you. Okay, if there's a market tip, we'll also notify you. Okay, if the market crash bottom, okay, we might also announce it there. Okay, but okay, if possible, I'm going to teach you in this class. Okay, all the merrier, right? So hope to see you, and hope, okay, of course, this is a sincere hope that all of us stay safe. Okay, stay healthy. Okay, and hope everything will be fine at the end. Okay, thank you so much. Okay, see you again. Bye bye.